The United States is once again in the middle of a major trade dispute, one that experts are calling the tariff war of 2025. If you thought the only war you'd be fighting this year was over the last parking spot at Walmart on Black Friday, think again. With new tariffs on imports from Canada, Mexico, and China, many Americans are asking the same questions. What will happen to the U.S. economy, and how should we prepare for the effects? And if you're new to our investing channel, consider smashing that subscribe button like it owes you money. Before we dive into the consequences of these new tariffs, let's quickly break down what a tariff is. A tariff is a tax placed on imported goods by the government. The main purpose of tariffs is to make foreign products more expensive so that people buy more American-made goods. It's like making your neighbor's cookies cost twice as much, so you have no choice but to eat your mom's home-baked cookies, whether you like them or not. Sounds good in theory, right? But here's the catch. Tariffs can also make everyday items more expensive for consumers. And unlike your mom, the government isn't going to let you off the hook with a free snack.
If this is helpful so far, please consider smashing that like button so that you can help other people too.
Why is Trump increasing tariffs? According to a White House statement, President Donald Trump announced new tariffs on imports from Canada, Mexico, and China in early 2025. The administration justifies this move as part of a strategy to address issues such as illegal immigration and drug trafficking, particularly the fentanyl crisis. The new tariffs include a 25% tax on imports from Canada and Mexico and a 10% increase on imports from China. So if you were planning to buy Canadian maple syrup, Mexican avocados, or a new smartphone from China, brace yourself. Your grocery bill and tech shopping list might start looking a little scary. According to Barron's, the University of Michigan's Consumer Sentiment Index has already dropped to 67.8 in February, with inflation expectations for the next year rising to 4.3%. This indicates that consumers are less confident about the economy, and higher prices could make things worse. Tariffs can also hurt the economy by slowing down economic growth. The Brookings Institution predicts that the 25% tariffs on Canada and Mexico alone could reduce the U.S. GDP growth by 0.25 percentage points, which equals a loss of $45 billion in economic output. How are Canada, Mexico, and China responding? Trade wars don't just affect one side. In response to the U.S. tariffs, Canada and Mexico have imposed their own tariffs on American goods. According to AP News, Canadian Prime Minister Justin Trudeau and Mexican President Claudia Sheinbaum announced new tariffs targeting U.S. agricultural products, automobiles, and certain industrial goods. Canada has introduced a 20% tariff on American dairy products, beef and poultry, increasing costs for U.S. farmers and raising prices in Canada. Mexico has imposed a 25% tariff on American corn, soybeans, and pork, which significantly impacts U.S. agricultural exports, as Mexico is one of the largest buyers of these goods. Meanwhile, China has responded aggressively. According to the Chinese Ministry of Finance, China has introduced 10% and 15% tariffs on select U.S. goods starting February 10, 2025. Additionally, China has restricted exports of certain minerals essential for U.S. manufacturing and launched an antitrust investigation into a major U.S. tech company. With all three countries countering U.S. tariffs, the trade war could escalate further, leading to even higher costs for businesses and consumers. What can the average American do? With all the uncertainty surrounding the tariff war of 2025, it's important for everyday Americans to prepare for what's coming. Tariffs can raise prices, affect jobs, and make life a little more expensive. But don't worry, it's not all doom and gloom. There are some simple steps you can take to stay ahead of the game. Think of it like preparing for a storm. The better you plan, the less soaking wet you'll get. 1. Stay informed. Staying updated on trade policies might not sound as fun as binge-watching Netflix, but trust us, it's worth it. If you don't keep up, you might be in for a surprise when your favorite imported snacks cost twice as much. According to the Wall Street Journal, analysts expect more trade tensions, meaning things could get even pricier. So, how do you stay informed without getting a headache? Follow reliable news sources like Bloomberg, CNBC, or even financial YouTube channels that explain things in simple terms like our YouTube channel. Government websites like the U.S. Department of Commerce also provide official updates if you can stay awake long enough to read them. Pro tip, set up Google Alerts with phrases like U.S. Tariffs 2025 so you get the latest news without having to search for it. And if reading long articles isn't your thing, financial podcasts and TikTok explainers can keep you updated while you go about your day. 2. Adjust your budget. Nobody likes hearing the words cut back on spending, but with prices rising, it's a smart move. Imagine going to the grocery store and realizing your favorite brand of cereal now costs as much as a concert ticket. Ouch. The Financial Times suggests stocking up on non-perishable essentials before prices spike, but make sure to check expiration dates unless you enjoy eating stale crackers. One way to budget smarter is by using apps like Mint or You Need a Budget, YNAB, to track where your money's going. You might be surprised how much you're spending on subscriptions you forgot about. Do you really need that 7 streaming service? Also, consider switching to generic brands. They usually taste the same, but without the fancy packaging. For big purchases like electronics or cars, waiting for sales or considering secondhand options can help you avoid the worst of the price hikes. 3. Support American-made products. One easy way to dodge tariff-related price hikes is to buy more American-made products. If imported goods are getting more expensive, why not support local businesses instead? It's like choosing to eat at your friend's new burger joint instead of an overpriced chain restaurant. Look for Made in the USA labels when shopping for clothes, electronics, and household goods. Websites like MadeInUSAForever.com list all kinds of American-made products, from jeans to furniture. If that's too expensive, you can try pre-owned stores such as Goodwill. Farmers markets are also a great place to get fresh, local produce while avoiding extra costs on imported food. And if you're in the market for a new car, companies like Ford and Tesla manufacture vehicles in the US, which might help you dodge tariff-related price hikes. There's a $2,500 referral discount on Tesla. Feel free to check it out in the description below. Plus, you'll be helping American workers keep their jobs. A win-win. 4. Invest in skills and education. Jobs in industries that rely on imports, like manufacturing, retail, and farming, might be at risk if the trade war continues. That means now is the perfect time to learn new skills or consider a career shift. A 2025 study by the U.S. Bureau of Labor Statistics found that fields like tech, healthcare, and renewable energy are expected to grow despite economic challenges. So if your job might be affected by tariffs, learning something new could be a game changer. The good news? You don't have to go back to school for 4 years to gain valuable skills. Online platforms like Udemy, Coursera, and LinkedIn Learning offer affordable courses in coding, cybersecurity, and digital marketing, things that companies always need. Trade schools also provide quick certification programs for careers like electric vehicle repair and solar panel installation, which are in high demand. And if you're happy in your current job but worried about stability, ask your employer about company-sponsored training programs. Many businesses offer tuition reimbursement or free courses to help employees upskill. It's basically like getting a free upgrade. Why not take advantage of it? 5. Build a financial safety net. If tariffs lead to economic uncertainty, having a solid emergency fund is more important than ever. Financial experts recommend saving at least 3 to 6 months' worth of expenses in case of job loss or unexpected costs. If that sounds impossible, start small. Setting aside even $20 a week can add up over time. A smart way to grow your savings is by using a high-yield savings account from banks like Ally or Marcus by Goldman Sachs. These accounts offer better interest rates than traditional banks, meaning your money grows faster without you having to do anything. For those who invest, it's a good idea to diversify your portfolio. Putting all your money into stocks from companies that rely on imports could be risky right now. Instead, consider safer investments like gold, real estate, and treasury bonds, things that usually hold their value even when the market is shaky. If you're not sure where to start, robo-advisors like Betterment can help automate your investments based on economic conditions. 6. Find ways to earn extra money. With rising prices, having multiple income streams can be a lifesaver. Even if you have a full-time job, Finding a side hustle can give you extra financial security. Platforms like Fiverr and Upwork let people make money from freelance skills like writing, graphic design, or coding. If you prefer something more hands-on, selling handmade crafts on Etsy or flipping thrift store finds on eBay can be surprisingly profitable. And let's not forget about passive income. Renting out a spare room on Airbnb or investing in dividend stocks can help you make money with minimal effort. Plus, learning new ways to earn money can be fun. Who knows? That hobby you've always wanted to turn into a business might actually work out. With all that said, the United States Tariff War of 2025 is shaping up to be a major economic challenge. While the government hopes these tariffs will put pressure on Canada, Mexico, and China to address key concerns, they also come with risks like higher prices, slower economic growth, and potential job losses. As Americans, the best way to handle these changes is to stay informed, plan financially, and be adaptable. So what do you think about this tariff war? Feel free to comment below and let us know.
Thank you so much for watching. If you want to learn more, feel free to check out our next video.